Peter Eliades with you. This is Thursday, January 2nd, 2020. Happy New Year, everyone. This is going to be a remarkable year in the stock market. Trust me. Sorry for getting on so late this evening, but it's been a very busy day. We were in town today, and in town for us means 45 miles away. So a lot going on in our lives right now. As you know, we had our grandson here, had to take them back to the airport, run a lot of errands, still working on my Tesla, which has been totaled now. Anyway, you don't need to hear all my little stories. What you need to hear is about the market. And that's where we're going to go. It's going to be kind of stream of consciousness today. I'm usually pretty well organized, as you know, but I've been notes for some charts to look at here. This one is the New York Composite chart that we're looking at. We might as well look at this one right away. I had it scheduled to show to you last. But this was a very important trend line for several years now. It has been very important. And it looks like we've made a breakthrough here, which must be considered bullish. Now, there are some practical limitations to that, because if you go all the way back to where this trend line, you can say, originated somewhat, that was back in 2009 at the bottom, and initially actually November of '08. At this point in '09, we fell well below the trend line, about 10% below it, just for a week or two. And from that point on, this trend line has been remarkable. Every time you came down to it, here, and around here, it acted as support. If you broke below it in distinctive fashion, as you finally did right here, then the line became resistance on the upside, as it did through this whole period here. Once again, slowly regaining the upside. Once it gets to the upside, the line becomes support once again, as it did after the January of 18 high. Broke convincingly below it in October of 18 and has been there for virtually a year, from October of 18 to November of 19, and now it looks like it's broken significantly above it. And that has to go into the bullish category. The only thing I would say to you is we may have some kind of symmetrical thing going on here, where at the very beginning of the pattern, back in 2009, you get a significant move below the line, 10%. Perhaps this is telling us we're at the very end of this line and we get a significant break above it, being a fake out move. I don't know. I can't tell you that. I'm just giving you the possibilities. Okay, let's go to market day projections, which is right around here somewhere. No, we want the closing ones. Daily projections close. Look at this little guy here. This is the Dow Jones Industrial Average. These are nominal 40-week projections. We have been telling you all along have been outstanding, and it's probably the one of the notable outstanding upside projections which hasn't been met. You can see how close we're getting now. We are actually at today's close of 28,868.80, within 1% of the lower part of this projection window. So that's how close we got. I don't want to get too complicated here, but we're going to show you this more clearly on a bar chart. But look at this little channel here with the red lines. This is taking the closing low, in this case right at the end of May, beginning of June of this year, and joining that to the closing low. In this case, it's August on the closing price chart. It's different on the intraday. And then simply taking the high point in between the two of those, guess what? Today we closed virtually right on the upper channel. Now, as you know by now, if you've been following these updates, I'm a channel guy. Most people use trend lines, and I use them also. But this point here has broken through most of the tops lines and trend lines that you would put on this chart, but it has not broken above the channel line, a very clear-cut channel line. In fact, the channel line on the bar chart, the intraday chart, is even more clear. We hope to show you that in a couple of minutes, but we did want to show you this one. let's take a look at the New York Composite Index. And the chart we want to show you there is this one right here. Now notice on the Dow, there's nothing notable here. But let's go to the New York Composite Index and point something out to you with our remarkable projection software. Look at this little guy here. Now remember, I've told you often that the New York Composite Index turns out to be one of the most reliable and consistently accurate projection generators. This green box here, this projection, is not from this low down here, because we went above that low, gave a projection way up here, but then distinctly broke below it for more than a month here in this time period in May and June. So we established a new low here, and when we broke above that convincingly in the end of June, the beginning of July, it generated this projection going up to 13,941.93 to 14,129.96. Now, I know you don't follow the New York Composite Index that closely, at least most of you don't, but look where we're coming into close. We got just barely into the projection window about a week ago, right in here, but we're fully into that projection window today with this new move. This was a barely thing. This is a convincing thing right here. So we're seeing even more projections being met here, and things are starting to get a little bit exciting. What else did we have to show you? Let's see. We showed you the nominal 40-week on the Dow, the New York Composite. Excuse me. Oh, this is a good one. This is a really good one. The Dow Jones hourly. Look at this little sucker here. I'm going to try and go like this so you can see. Okay, now you should be able to see everything. This is a low, a very important low. This is on the Dow. I call it the hourly chart. It's the 65-minute chart on the Dow, 6 exact periods in a market day. From the low of June 3rd, and this one goes through two lows. It goes through the low of, what is this low? This is the August 15th low, and the actual anchor for the second point is October 3rd. We can tell the anchors by clicking on the line and looking for the little black squares. So the two anchors were June 3rd, and I think October 3rd. Is that right? Yes, October 3rd. So where do we put the upper channel? Well, you've got all kinds of choices, but in this case, the most obvious one is the high that occurred in mid-July. And so we had this channel. We've had it all the way from the time this low was formed in October of this year. Actually, I can't say that anymore, can I? October of last year. It was 2019. But look what's happened. A move up towards it, pull back. Move up towards it, pull back. Move up towards it, move up towards it, up towards it. And today, guess what happened, folks? This is remarkable. This hourly chart channel was hit virtually exactly as you can see. Does that mean that's the end of the road, bull market over, straight down? Not necessarily, but it's pretty strong and powerful argument here, especially with the sentiment numbers we're looking at in terms of bulls versus bears and the complacency out there in the stock market. So I wanted to show you this chart, and you know what's interesting about this is you can see the overnight market going by above me. The S&P futures are down 20 points right now in the overnight market. So I wish I had put this update on earlier for you. It would have been a lot more impressive had you seen the market go down after we showed you this channel. But this is something to keep an eye on also. So we've got a lot of things working for us here. We're going to keep right on top of the market with you. And we want to thank you a lot for watching. Have a great beginning of this new year, and have a very happy, prosperous, and most of all, healthy new year. Thanks for watching. Haven't subscribed yet? Bottom right, click on the banner. Once you click on the banner, click on the bell. You'll be notified of all the updates as they come on. Thanks a lot for watching.